Hello and welcome. Today we're working on what is a classified balance sheet. Now this is kind of the definitions and thinking through the classifications, so let's get started. If you're new here, my name's Jeff from Finally Learn, or help you finally learn accounting using Excel. Now we're in the middle of the financial accounting chapters. I'm working my way through the financial accounting chapter, so this is generally in chapter 3, adjusting the accounts. But once you know how to do a classified balance sheet, it's really throughout the entire financial accounting, and all the accounting courses use a classified balance sheet. All right, so let's look at an example real quickly. The balance sheet for Apple, we have current assets, non-current assets, and we have total assets. We'll come back to this in just a minute, but this is what we're talking about. So let's talk about the balance sheet. Remember, is assets have to equal liabilities plus equity. Now, what are assets? Assets are economic resources that the company owns. So these are things of value that we own as a business. Now we have 4 categories broadly. We have the current assets. Anything we expect to use up or convert to cash in 1 year or less would be a current asset. So things like cash and cash equivalents, marketable securities, which is a short-term investment, inventory that we're trying to sell to different companies or to the public, supplies, any prepaid expenses, and then AR is the abbreviation for accounts receivable. All the receivables are assets. If they're less than 1 year or less, then they're current. If they're long-term, then we would call those investments. So these are all current assets. They go first, and cash in the United States, cash is the very first asset we list under current assets. Then we probably have investments. We have long-term investments, things like notes receivable, that's greater than 1 year, stocks, bonds, investments in preferred stock, investments in common stock, on and on and on. These are investments. These are not necessarily just to run your business, but you've invested for the long term for some reason. Now, the next category is plant assets or property, plant, and equipment. They could call it property and equipment. They could call it fixed assets, but generally, you'll see it'll say something like property and equipment. So these are these long-term assets, land, building, equipment, machines, cars, trucks, computers, furniture. These have long lives. And remember, these are the items that we depreciate. So these items, except for land, will have an accumulated depreciation with it, which will reduce its value on the balance sheet, reduce its book value. Now, the last category of assets are intangible assets. So these are legal rights like copyrights or trademarks or patents, goodwill, so on. So these are at the fair value of those assets, those intangible assets, legal rights. Now we have 2 categories of liabilities. We have liabilities that are current 1 year or less. So here's some examples: accounts payable, wages payable, tax payable, salaries payable, interest payable, on and on. We have payables, could be utilities payable or things like that. So those are 1 year or less, running the business. Now we could have long-term liabilities for more than 1 year, so mortgage payable, bonds payable, notes payable. What if a note is 6 months? Well, that'd be a current liability. The long-term liability has to be 12 months or more than 12 months, so more than 1 year. So a 5-year note would be a long-term liability. A 5-month note would be a current liability. Now we have in equity, we just have really 2 broad categories. We have paid in capital, what the owner has put into the business. So things like common stock, preferred stock, additional paid in capital. Sometimes you might see a subtraction called treasury stock. If the company ever buys back stock, then there would be a reduction. This APIC is additional paid in capital. So if we sell stock for more than par value, you might see some additional paid in capital. Now, retained earnings is the concept. You have beginning retained earnings. To that, you add all the previous year's net income minus all the year's dividends, and then you have ending retained earnings. So remember, the balance sheet has to balance. So our assets have to equal our liabilities plus equity. So let's go back and look at the Apple financials here, and specifically the Apple classified balance sheet. Now, consolidated means all the different companies that it owns is merged together under one financial statement. Their year end ends basically in September, September 2022. So here we have current assets, we have cash and cash equivalents, we have marketable securities, accounts receivable, inventory, and then some other receivables. So this is for non-trade receivables. They have some vendors that owe them money, and then some other current assets, could be prepaid items and things like that. Then they put everything into the non-current assets. Marketable securities would be in long-term investments, property, plant, and equipment, and then other, that would be the intangibles. So you can see easily, here's what they have, and they have 352, this is in millions, so this is $352 billion of assets. So we know liabilities and stockholders' equity have to equal that 352. So all the way down, the 352 is going to be the total liabilities and equity. So let's look at liabilities. We have for Apple, they have current liabilities. These are all due 1 year or less. Accounts payable, other, deferred revenue. Deferred revenue is anytime they get paid early, so it's not earned revenue yet, it's deferred revenue, and then when they earn it, they'll recognize the revenue. Maybe you pay for 1 year's worth of Apple Music. Well, it's not revenue until they earn it each month. So that would be part of deferred revenue. Now, non-current liabilities, they have other non-current liabilities, long-term debt, and so they have total current liabilities of $153 billion. They have non-current liabilities, $148 billion. They owe $302 billion on assets of $352. So their total stockholders' equity is about $50 billion. So common stock is $64 billion. The retained earnings, and it is a negative number. Now let me ask you this. Has Apple lost enough money where they have a negative retained earnings, or is it possible they have paid more dividends? Remember, net income increases retained earnings and dividends decrease retained earnings. So you could have where they paid more dividends than what was accumulated as retained earnings. Then we have total stockholders' equity, and so our total liabilities and equity has to balance because the balance sheet is assets equal liabilities plus stockholders' equity. Hey, the next video we're going to show you how we can create a classified balance sheet with some numbers. From start to finish, we'll show you how to do a balance sheet with the numbers and plug it in and show a classified balance sheet. If this is helpful, please give me a thumbs up, like, subscribe, and ask your questions in the comments below, and I'll do my best to respond to them. Hey, thanks for watching. See you in the next video.